Hello and welcome to BISP Solution. So now we are going to continue a QuickBook desktop session. So yesterday we were doing So hello and welcome to BISP Solution. Yes, we will continue to a QuickBook desktop discussion. In the previous sessions, we were discussing about the invoice. Okay, of how we create the invoice and what is the purpose of the invoice and what will be the effect on the trial balance or a particular related ledger. Okay, so now today we are going to continue where we left it. So after recording invoices, we have seen that on the trial balance, let's recall it. After creating a trial balance, we will go to the trial balance account, and you will be able to see that this is particular amount, this is particular ledger balances is increased. Okay. So now we are going to do some topic here again. So after that I'm going to show you how to. So after creating the invoice, now what is the next step will come? Of course, the next step will come about the receiving payment from the customers. Suppose the customer is going to pay you after some days after you just issue him or her the invoice. So after issuing the invoice, you will see. So whenever you are going to whenever you are going to receive the payment, you will see that the account receivable balance will goes down, and the new amount, the new ledger, or you can say the new account will pop up, whether it is a cash or whether it is a bank. It will increase it. So there, and you will see there is nothing change in the editing income or a video income. So this is how the payment work, because whenever the payment as we all know, whenever we are going to receive from a customer, that is account receivable, its impact is come on the bank account. So why does not the editing income and video income not increase? As we all know about the gap accounting, that whenever we create invoice, we the account basic principle is work on the accrual basis. So whenever we are just recording or anything, registering an income, we just have to give the reflections into a particular account. So that's why the editing income and video income will not goes down and the account receivable goes down, because when we receive the payment, and it is similar to it will be posted in a balance. So yesterday we create invoice, now we will go and receive. Suppose on January 8th. No, so first I will tell you how to receive the payment. So from the customer menu on the menu option, you will click on the customer menu, and you will see here that receive payments. So here you will receive payments. After you created the invoice, it is not necessary that you will get the payments on the next day or on the same day, but on different time. But after created the receive payments, we will go and see the window is open up here, and now you will see. First we will close the trial balance and we will move forward. Okay, so receive payments. So this is how here if you want to add this receive payment window on your customize icon, you can go from here and use the customize icon bar, and here. Okay, before we move to now before we move, okay, the one thing I just told you about the preference window. Okay, what does the preference window work? So here we are going to use one preference more. So first of all, suppose our next example is on January 8 we have received invoice 1 from the Minx and directly record it into a bank account. So as you know that we have issued the Fairy Minx a video income invoice. So now we are going to receive the receive the amount. Sorry. So from which date we are receiving the amount on A. So we are select from the brought down list, you will able to see all this information as I already explained you about this formatting, reports, payments on the previous session. So I am not going to repeat this. So receive from here. So when you click on Fairy Minx, so what does this show here? It is shows that you have an unpaid invoices, open invoices of this particular customer. So we have issued 2 invoices to Mr. Wings. So okay, so this is here it shows. But before we move forward, I am going to show you that the preference, what is the preference related to customer payment and so from the main menu on edit options, you will go to the preference, click on the preference. Here you will come and you will just come here on the accounting on the payments options. So now here on the payments options you will able to see that the receive payment of options. Here you will receive automatically apply payments or automatically calculate the payments and use and deposit fund as a default deposit to account. What does this account means and what or this option means? It means that if we are not going to define that the funds we are going to receive will posted on a particular bank account or a particular petty cash account. So the QB defaulted you on and open up the undeposited fund account. So we will go and uncheck this. So the amount will go in a particular bank account. We click on OK and okay, we will okay, we have to close the window first. So here again from the preferences, okay, so it will change. Now we are going to receive payments. So from the main menu on the customer option, under the customer options we will see the receive payments options. So on 8th of January we are going to receive the payment of invoice 1 from Minx and it is directly deposited to bank account. So here when I just uncheck the undeposited of feature, here you will see this option will pop up. So it will ask you in which account you are going to deposit it. So we will use the cash in bank account. So we are going to receive from Fairy Minx, and what amount is we are receiving the invoice number 1. So we are receiving $2,500 on 8th of January 2024. So yeah, okay, you want to give your reference and you can give it reference or anything particular and just save and close. And now what I am telling you, after posting the customer amount receivable, you will able to see that the account receivable balance will decrease by $4,600 and a new balance in the cash and the trial balance will comes up and it will increase to $2,500. This means that we have now received the amount of $2,500, and as parallel you will see that editing income and video income is not yet affected. So just this means that whenever you receive the amount, the balance of bank will increase and the balance of account receivable decrease. Okay, so now we move forward to a next. And so what, so the next thing is come up. So what if a customer is paying half amount or some amount? No, he is not paying full amount to us. So what does it happen? Does the QuickBook will allow us to record the half amount or not? So we will go and see it. So Here we have another example. Okay, we have another example is like on 9th of January, we are going to receive invoice number 3 from Mr. Caro, and we are going to deposit directly into a bank amount, but the amount we are receiving is half. So when you click here again, the Sal Caro, here you will see the option. Okay, so suppose we are going to receive half amount. So what is the half of 1750? So suppose we are going to receive the 1000 of the this particular invoice, so we will just click on 1000 on 9th of January 2024, and you see that the date is same, the number is same, it is it defining the invoice number. So this is, if you are seeing this particular thing, you should see on a bigger picture that the number is the invoice. The original amount is 1750. The discount that is that we have just gave on the payment terms, the amount due is of course 1750, and you will able to see that payment is coming upon the $1000 amount. Okay, so just deposit to cash in bank. So when you click 7 close, and now what happens, you will able to see here on the trial balance that again the cash in bank is increased, but the accounts receivable balance is goes down. So this is how the payments, this is how the account receivable or account receivable, or you can see the customer payment option does. So yeah, we are going to see about the particular customer's balance detail. Okay, so now if you see, now if you want to see that which invoice is open invoices and what is the balance of a particular customer, so from the main menu you will go to the reports options. Under the reports option you will go to the customers and receivable options, and from here you will see the open invoices. When you click on the open invoices, we are going to see all the okay, now you see Fairy Wings. As you remember, we were having two invoices of Mr. Fairy Wings, invoice number 1 and invoice number 4, and we have received the invoice number 4. So you see only the invoice number 4 is open, we have not yet received on the 4. Now as same we goes to the Sal Caro, we have only one invoice to him, but we have not received the full amount from him. So that's why the in open invoices balance, open invoices transactions is showing you the that the Sal Caro is still having an open invoice. So this is basically, this window will help you, will provide you what are the invoices that are yet to, what are the invoices yet pending, the what are the amount are we are going to receive, what are the pending amounts we have yet what are the pending amounts we have yet to receive from a particular customers. This is basically the information of a particular invoices, that this invoice is from this invoice this amount we have to receive, this invoice this amount we have to receive, and this invoice is gone that we already received. So if you want to see the if you don't want to see the balance detail, you want your customer asks that what is the balance is left to him, so just again from the main menu on the reports options, again under the customer and receivables options, you will see the customer balance detail here. So you just click on the customer balance detail, and now here you will see. So what is the difference between the open invoices and the customer balance detail? The most basic difference is that in the open invoices we are seeing only the invoices which is open it, and in the balance detail it show you all the transaction of a particular customer. So here you will see that we have invoice 1, invoice 4, and we have just gave him the payment. We have just received the payment of 2500, so the balances remain is 1200. You can want to tally, you can just go on particular invoice and you can see the reports. So this is how the customer's balance details, and this is how the customer open invoices shown up here. Okay, so now we move forward to our next step, and that is, now this is, we have now seen that we are creating the invoices and we are receiving the amount learned later. What happens when you just create the invoice and you will receive the payment? So this next topic will go up is the sales receipt options. Here on QB desktop, when we are receiving payment immediately after supplying the goods or after performing some services, the business or admin or the manager will create the sell receipt account. Sell receipt, it is because the sell receipt is the receipt that we issue about particular goods and services, and we are receiving the amount. So from where we are going to record the sell receipts accounts? So from the man menu we will go to the customers again, and here you will see the enter sales receipts options. Now you click on sales receipts options. If you want to add this sales receipt option on your customers icon bar, if you are using frequently, you can add it again from the view options, add customers, add enter sales receipts to icon bar. So here you will see it is it is a little bit different to invoice and the payment receive options. So from here you see all the options formatting. Now here one option is comes of send and ships. Here if you want to email, you can email it. If you want to give a FedEx, UPS and USPS, these options you can use it, and all the options is same as invoice and that. Now here you will again from the brought down list from for whom the you perform the services or you supply the goods, you can choose it. Deposit it to, again now here it will show you again deposit, and as you can see in the invoice it will not show you the deposited account, only show you on the customer's account. Here you will choose the cash in bank, as we are going to use cash in bank. Okay, so now customers, so now we are going to perform 1 or 2 3 sell receipts. So on January 11 we perform editing services for 5 hours for Mr. Palmer, and we receive the payment. We are whenever you see that you receive the payment immediately, you just go to the sell receipt, enter the sell receipts. Okay, so Mr. Steve Palmer, as soon as all the customer information and transaction will come up here on the item list, you will choose editing service income. We perform 5 hours to him, again on the tab options, and you will able to see here. Now as soon as I will click on 7 close, what will happen? What will the $750 will go? Yeah, we can see here after click 7 close sorry, you will see the trial balance. The account, first you will see the account receivable balance is not increased. Why it is not increased? Because we just received the payment, so there is nothing to do to the account receivable balance here. The cash in bank will increase to 750, and editing income is increased to $750. So now as we have performed the sale receipts account, we will go and just do 2 more transactions, and we will show you the account receivable balance or more in under the digging up. Okay, so just go and click on the customer menu, on the enter sales receipts, cash in bank. On January 12 again we are giving video services to Mr. Steve Palmer. Okay, what video services of 2 hours. Okay, just 7 new. Here you can see it is automatically changing to the sale number, as I already told you, when we creating the invoices, it will change the invoice number 1 2 3 automatically. QB will remember the previous invoice and it is automatically change it. Here also in the sales receipts also it will change it. Okay, so we will enter. So we are to Mr. On January 13th to Mr. Salcaro, we performed the 5 hours of editing services. Okay, 5 hours to editing services. We will click 7 close now. Now we will go and see the trial balance here. The trial balance, what does trial balance show? As you can see, the account receivable remain 3600 dollars, and the editing income and video income is increased. So now what I am telling you, after entering the sale receipt, you will see that account receivable does not even know that you perform the certain transactions. As you can see, there is only invoice 1 2 3 4 5. There is nothing related to sales receipts account. So this is how the sale receipts balance will, the account received balance can be checked. You just double click on it. Now here you will see on the cash and bank account, we will double click on balance and you will see all transactions come up here. We just gave 2 payments of the particular invoice of all older invoices. We have entered the 3 sales receipts account. Okay, so now what next? What balance will we see? Here you can see on the reports account, again customer receivable and customer balance detail, you will able to see that the transactions, only the payments transactions, there is nothing of sale receipts. So on the sale receipt is always recorded in the bank account here. Okay, so when we go to the account receivable account, we will see the transaction list by customer account. We will see on OK. Now here you will be able to see all the transactions of a particular customer. So this is how the customers account is done. So with this we have completed our accounts receivable portion. Now we will move forward, and the next topic is to enter the bills. Okay, first thing is that bills is equals to invoices. Why I am just saying that bills is equals to invoices? It is basically the invoice. Suppose we are issuing the invoice to a customer. For the customer, it is the bills. As similarly, the bills is issued by the vendors. So we are going to create the bills we have received from the vendors. So vendors and payables types of transactions are those transactions that are anything that relates to expenses, that will be learned in this section. Okay, so what is AP? Account receivable is keeping records of vendors and vendors transactions. It is really keeping track of what we owe to vendors for products and services that they provided to us. Okay, it is like that we have received certain goods or we have received certain services from our vendors. So now we are going to pay them. Okay, so now how we are going to record the transactions? We have 5-6 transactions for better understanding about the accounts payable portions. Okay, so first of all we will see where we are going to record the account, where we are going to enter the bills. From the main menu you will see the vendors, as we have discussed in the previous session. Here on the enter bills, when you click on the enter bills, now you will able to see these options. Here you will see the bill window. Here you will see the main, report, search, find, new. Here you will see all we have discussed, and now you will see the two boxes here. First of all, bill receive. Suppose we have not yet received, but we want to enter the bill because we have, because as per gap rules, we are performing on the accrual basis, so we have to record a certain expenses, of course. So we will record it. Suppose we will receive the bill, so you just check this bill receive box and enter the bill here on the bill and credit. Suppose you are performing on the bill, so you are going to pay amount soon possible, but suppose you are taking the services or goods on credit, you will just click on credit and the credit amount will remain, the due date will gone, and the address is gone. And okay, so we are just not using this options. We will discuss later. So we are clicking on later, so we are just going to record certain transactions for the better understanding. Before we move forward, what will happen after we record the bills? As you know, we record the invoice, the account receivable balance is increased, and a particular service balance will increase. Same is here. When you enter the bill, the accounts payable amount will balance will go up, or you can see the on the trial balance it will pop up, and as similar to the particular expense balance will also increases. Okay, we will perform one bill, we'll create one bill, and we will see what balance will come up here. Okay, suppose on 15th of January 2024 we enter a bill for John Stones, okay, for telephone expenses. The bill reference number is 1212 and the amount is $600. As soon as you click on the tab option, you will able to see that the amount will come up on the lower. You will see here is the expenses, here is the items. Now what is the meaning of expenses and items here? Suppose this is the items, the telephone expenses are expenses. Suppose we are receiving any item which we have created on the item list, or we have created the fixed assets which we are going to discuss. You will enter on the items options and will have provided the related to here. Okay, so now when we click save and close, now we will see the effect of entering a bill here. So as we expected, as I told you, that when you enter the bill, the accounts payable will increase to $600 and the telephone expenses amount balance account is also come up here. So this is basically same as accounts receivable. So yeah, you are thinking right. When we receive the payment, the balance will goes decrease of the cash balance and the accounts payable also will decrease. Yeah, it is right. It is similar to paying the bill. So first we record certain transactions for the better understanding. So we are going to record more transactions. Okay, on invoice again from the enter bill. Now enter bill on 16th of January 2024. Okay, Mr. Stephen Mix. We enter the bill Mr. Wix with the reference number of 7845 and with an amount of $400. What he is provided a services, the electricity expenses. So just again save and new, and we will write on the 17th January. We quickly go on the 17th of January, Mr. Cassie Hart with a reference number of 1478 with the amount of $200 delivered certain goods and certain goods to our client. Okay, again 7 new. On 18th of January 2024, Mr. Moody Wood. So we have covered all our four vendors because we are going to perform some activities for better understanding. Okay, $100 with a reference number of 456 and an amount of $100. He repaired certain things in a business. Again 7 new. Now on 19th of January, Mr. John Stones again. We buy him. We buy with a reference number of 1234 a fixed assets of $2000. We buy. So as you can see, when I click on the John Stones, the QB is memorize the expense, and here you will be able to see the expenses. Okay, so just like that you will record the expenses from here. Okay, but what we received, we receive the equipment. Here we have already created the equipment, that's why we are using the equipment on the expenses. Suppose we are going to create the item, it is will be the item of course. So the customer, the okay, so just 7 new. Now again when I click on the on 20th January 2024, we supply Mr. Casey. When you click on the Casey Hart, you will see that delivery expenses will come up as popular, because as I am telling you in the previous bill, the QB is memorize the invoice in the bill we created to a particular vendor. Okay, with a reference number 1785 with an amount of $250. He supplies certain goods. Okay, so 7 new, and we will record our last transactions of Mr. Mix. As I click Mr. Mix, again it comes to electric expenses. We just change the date to 21st January with a reference number of 9845 with an amount of $200, but he performed right now telephone expenses. We click on save and close. Now what will happen, we will see the trial balance details. Here you will see that particular expenses is balance is increased, and the accounts payable balance also increased to $3750. So now when we are going to pay, the balance of accounts payable is decrease of course, and as parallel to the debit side, the bank balance will also decrease. Okay, as we all know, as we have already done in the accounts receivable, it is same to accounts payable. So now we are just pay some bills and see what is the effect on our trial balance and what will be the effect on the vendor's balance details. We are going to see the balance detail as we have seen the customer balance details, and also when we are having the open invoices, just like the customers, we have also the unpaid bills options here. So we are going to see which bill is not yet paid to the vendors. So firstly we will go to the payments options on the vendor, and we will pay the bills. Here when you open the pay bills options, you will be able to see that all the unpaid bills which we are going to pay in future are here. This is basically all the outstanding balances of a vendor. So it shows you if the list goes down to 100, 1000 or more, you will just go and filter it by the vendors, or you can select it by the vendor and sort it by the due date. Or suppose I just click on Casey Hart, there is two balance, and I want to sort it by due date, discount date, vendor, amount date, reference number, whatever you want to choose from the LOV, you can choose it. Here you will see that show bills on due on or before, means on the due date or on before, not after due date. And the show all bills means all the show. So suppose we are going to pay the first bill. We pay the bill of January 16 for $400. We have created the bill of Mr. Mix. So we will create, we will choose the options Mr. Mix, and you see that we are paying the bill before. You can this QB is QB allows you to select which invoice you are going to pay or all invoices you are going to pay. You just check it the box and move forward. So right now on 22nd January 2024 we are going to pay the bill of Mr. Mix of $400. So I click on $400 and you see this options is comes up alive. Here on the clear selections you can clear it. You can go to the go to bills. You just check it on the set discounts and set credits. Okay, so we are not going to choose. So when you click on check, the date option will come up. When you click on schedule online payment, the date option is gone and you will schedule the online payment on a later date. Okay, and credit card, of course you want to create the credit card and you can create it, but right now we will providing the check. So we are going to write on 22nd of January 2024. We will you can choose to be printed if you have predefined printed, but right now I am just assigning the check number, and you can select the account from which account you are going to pay. Right now we have only one cash and bank. We just pay selected bills, and here it will ask you to write the check number. We will write the check number to 1, click on OK and done. And now we will see the balance of the trial balance. The cash in bank is decreased to $400 and the accounts payable balance is also decreased by $400. Okay, so now again we will do the more complex situations like we did in the customer related, that we are receiving half amount or that. Okay, so on 20th, again from the vendor option pay bills, on 23rd January 2024 we pay the bill of Mr. John. Okay, we are going to pay Mr. John bill, John Stones. So we are having two bills of Mr. John. So John, we are paying the bill of John of 1212. Okay, so we just click on 121 and we are paying half amount. So just select this amount and write the amount you are paying and click on tab. The QB automatically understand and click this. But when you are paying the half amount or lesser amount, the set discount and set credit options will gone missing. Okay, it shows that you are not going to get discount and you are not going to get the credits. Okay, just write the change the date to 23rd January and pay the selected bills. The check is number 2 and okay and done. We are going to see what happens to the particular accounts payable options. Okay, so now we are going, so suppose from the one amount we are paying the balance amount of the previous one and the half amount of the current bill. So how it will be paid? So again from the main menu under enter vendors options pay bills. Now here, so we are going to pay the invoice 121 of Mr. John, the half amount, and we are going to pay the full amount. So again select John Stones, you select two bills. We are paying full amount to Mr. John and we are paying half amount to half amount of this bill. Again tab and we pay change the date to 24th January 2024. We pay selected bills, and here we will give the check number 3 and OK. Done. And now the trial balance, as always, trial balance will get reflected. Cash in bank is gone down, but the accounts payable is also goes down, and nothing changed in the delivery expenses. So now we move forward. Okay, so first I am going to show you the accounts payable balance. When you click on the when you double click on accounts payable, you will be able to see that we created the bill and we bill paid. So it is not allow you to show you. It is only the total balance, closing balance of a particular date of a accounts payable. So this is, you can just check it, the accounts payable, and when you click on cash in bank, it will all show you the transactions related to us. So now as you know, we have open invoices. Does the bill vendor is having some unpaid bills? We can see the answer is yes. So from the reports options, you will go to vendors and payable, and you will see unpaid bills details. Here you will see all the unpaid bills details. We have created many bills, but the bills we haven't paid will show up. As you can see, for the John Stones, it's still 1000 is left, so that's is similar to the invoice. It will not allow to wholly invisible unless and until you have paid. So as we know that we have customer balance detail, does the vendor balance detail is having here? The answer is yes. When you click on the reports and vendors and payable options, you will see the vendors balance detail. Here it will show you all the details. The unpaid bills only show you the unpaid bills which are left, and here vendor balance detail show you all the vendors balance detail. So you can see on the cashier, he is yet to receive. On John Stone, there is 2 bills created and the 2 bill payment is gone. Okay, so now if you want to see the transaction list of a vendor, balance transaction in balance, so you also check it. QB allow us you to check it. Sorry. So from the vendors and payable option, you will see the transactions list by vendor, and you click on here, you will click on OK, and you will see all the transactions we perform on the vendors option will pop up here. So this is how the accounts payable will go up. Okay, so now we have completed this accounts payable topic as well. So we have seen account receivable, we have seen accounts payable. Okay, so we have just completed accounts payable and accounts receivable options. Okay, so now the next thing is about the statement of cash flows. As you know, an organization as an organization wants to see the inflows and outflows of a cash, it will prepare the cash flow statements. Okay, statement of cash flow basically consisting of 3 activities: operating activities, investing activities, and financing activities. All the operating activities are related to operations of an organization, where the cash where the account receivable and accounts payable, its supplies or its sales. And investing in activities is that we are investing in, suppose, in fixed assets or in support, and the financing activities is related to shares and dividends. So basically, when we record any transactions that are from operations or from current assets or liabilities, via assets or liabilities, whether it is increase or decreases, the impact, the QB allows the QB will automatically give the impact to P&L, to balance sheet, and to cash flows statements. Here you can see the net income. Here we are seeing that about the cash flows. Okay, if we here you can see from the operating activities there is a net income of 7600, and the cash provided by operations, that account receivable is increase and decrease by the minus, it will come to the negative options and it will show you the accounts payable options. So here the impact of any transactions we are recorded will will parallelly record the transactions to a cash balance amount. So this is how the cash flow statements is work. If you want to forecast any cash flow, suppose you want to forecast the cash flow of a particular dates, next week or next month or next fiscal quarter, next fiscal, or you want to customize it, so you can customize it here and you will able to see this, what are the account receivable on that day before or after beginning balance changes. All are the options of related to forecast in the cash flow statement will record it here. So okay, this is how the statement of cash flow works. Why I am just giving an overview the posting of the cash flows, that how the cash flow how the statement of cash flow looks like when we post the transactions, whether we post a transaction in any in general or invoice or payments. The as soon as we posted a transactions in particular thing, the QB automatically post the transaction into cash flow statement. So now what next? Up next option is petty cash or cash in hand. What is petty cash and petty cash in hand? Petty cash and managing cash in hand means petty physical PC can physically be kept in a physical local box that someone has the key to, and the cash is inside. But petty cash could also be a separate section of the owner's wallet. It doesn't matter as long as we physically have a place to deposit the cash into and physically can take from that place to spend for a business expense. Then we can use a petty cash. Means suppose you are paying a little amount in a business, like any other expense like food expenses, anything small amount you don't want to pay through your banking channels, so you use the petty cash or petty cash in hand. So you can just pay from the petty cash account. So how does petty cash account will go? So petty cash account, what does the petty cash account will have an impact on the QB? When we create the petty cash, the trial balance will in the trial balance the petty cash in hand balance account will come up here and with an increase amount, and the cash in bank amount will goes down. Okay, petty cash amount will goes down. So whenever you record any transactions, whether you are paying, whether you are depositing cash in petty cash, the balance will increase and decrease in account in cash in bank. So why we use the petty cash? Suppose we are withdrawing and we want to pay in cash to a particular vendor, small vendor related to 1 2, so we use the petty cash. So from where we are recording the petty cash okay, so now we will go on the banking options and we will write a check. So we will write a check. From which account you are going to write? From the bank account. You just click on print letter options and you will use the receipt. Okay, any receipt you want to. I just click delete this receipt on 25th and we just create the petty cash. On 1st of February, we create a petty cash of $500. We are just installing the 500. It is like, suppose you are just adding any fund in your wallet. Okay, so pay the order to. If you don't have any pay the order to, you just click on add a new and click on other. If you want to leave it, you can leave it blank. On other, you just add the cash and okay. Suppose, and which account is going? Oh, we haven't created the petty cash, so we will create add a new from the bank account. It allows you to see the petty cash. You will continue and you will write petty cash, cash in hand. Okay, you can write it whatever details you want to write and save and close, and see the amount coming from your bank account to petty cash in hand. You just save and close, and you will see the petty cash in hand balance is come up here. Okay, so this is how you deposit your any amount, any fund into the petty cash. So now suppose you want to pay any expenditure from petty cash. Okay, so how will you record that? So again, from write check, from banking option, from write checks, you will click bank account to your petty cash. Okay, and it will show you the number. You can change the date. So suppose on 2nd of February you pay Mr. Mix Stephen Mix. Okay, so when you click here, you will see that you have an unpaid bill. If you want to pay the bill from the petty cash, you can just go to pay bills. If you are paying some other amount from the petty cash, it is related to a cash in hand account. So you just click on write your check and move forward, and the amount is of $80 with, sorry, amount is of $80 with a receipt of with a receipt of with a receipt of 987456. Okay, and we have just prepaid phone expenses, so telephone expenses. When we click save and close, and from the trial balance we will see the petty cash in hand decrease to $80. There is nothing change in the cash in bank, and the telephone expenses increases. So now we will pay other expenses. Suppose on February 3rd we pay Mr. Hart $120 cash for equipment. We added some equipment on cash. You just use this, just change the receipt number to 321456. On the 3rd of Feb, you just click to Mr. Cassie Hart. Again it show you, but you continue with your write and checks. You click on amount to 120, just put a tab, and it goes to equipment account, and save and close. Again you will see the petty cash here gone. And now, but you want to maintain the petty cash balance to $500. What will you do? Suppose you went to an ATM machine, to a nearest ATM machine to withdraw some amount. Okay, to withdraw some amount. So you just write a check, click cash in bank. Again just write here ATM slip number, again anything, ATM slip number 65. Okay, on 4th of February you withdrawn $200, and again on the cash account, again to Mr. Petty Cash. And just click on save and close, and now you will able to see the trial balance the amount of petty cash is increased to $500, and the amount is decreased from cash in bank to $200. So this is how a cash in hand ledger works in a QB. So with this we are going to end the session, and I hope you will you got to understand the three topics that we are already covered. The account receivable and accounts payable we have finished. There is a little bit options left. We will continue that tomorrow related to inventories, and the petty cash and cash in hand balance is completed. So thank you for joining the session.